On to the Midcap Masala show. Let's welcome on board the first management. And today we're going to be speaking with the management of PSP project to understand what's really been happening on ground, how's the demand outlook, and with respect to the Middle East disruptions, any impact on the business is the company is seeing or not. We'll try to find out that. And let me welcome Mr. Prahladbhai S. Patel, who is the CMD of PSP Projects, joining us on the show. Mr. Patel, hi, good morning, and so good to be speaking with you. And let me start with the
Good morning.
latest news flow. So many industries impacted because of the war situation, Middle East disruption around. With the current scenario, the conflict that is going on, is there any increase in your raw material price basket? Because especially when we look at the steel prices, they have already jumped 20%. How are you assessing the situation, and how is that expected to impact the sector you are into?
You are absolutely right. This war has impacted a little bit now, and it is now growing day by day because of the non-availability of gases. Some of the industries related to tiles and all that are being impacted. Smelting agents, companies who are into copper and aluminum are also impacted. To an extent, now there is a little bit increase, about 20 to 25% in terms of these metals also. Of course, it is impacting, but as most of the orders are passed through, so as of now, as a company, we are not impacted, but the owners of the project for which we are working on, they will have a little bit impact. And some of the project, which is our EPC project, which we have been doing since last 1.5 to 2 years, which is my own order book, apart from the group company, will have little bit impact because all the projects are in the final finishing stage.
Okay, so point taken. Mr. Patel, hi morning. This is Snehi also joining in the conversation. Talk to us about what your margin outlook is. It's on a 9-month FY26 basis. Margins on an average are at 6.3%. The guidance is around 8%. Talk to us about how you plan on covering up this lag. What's the outlook on margins now?
See, as our last 2 years, we were having a bad impact of UP projects, which got extended to beyond a limit, and it started in the Corona time. So that has impacted our order book, our margins to an extent of 1 to 2%, which we are now expecting to improve from here. And by the time of March 27, in next year 27, we will reach to expected targets of 8 and 9.
All right, 8 to 9% margin. But Mr. Patel, as of 9 months of FY26, your order book was at 90,178 crores is what we understand. But can you tell us what is the execution timeline of these orders, and what could be the likely guidance to end FY26 with, and outlook for FY27?
See, we end up in December quarter as 9178, and then onwards with this quarter we have received an order of about 5,600. So which will end up at 14,000, and if this quarter we are able to do 1,000 crore, we will end up at an outstanding order book as of March 26 as more than 13,000 crore.
Okay, and if you could help us with any visibility on the execution timeline, and more importantly, where are you seeing the order book going in FY27?
See, now again, as I said, that after the partnership of the Adani Group, we are having lots of capex coming from the group company only. So we have a visibility of more than 12,000 crores of projects to come from the group itself. And also, as Commonwealth is coming up, there will be a few projects which will be coming up from Commonwealth as a government projects. There are a few developments of corridors as religious tourism development, which is at Somnath and Dwarka. We can expect such types of large order where the company will be having a better qualifying criteria, as we have done that Kashi Vishwanath corridor. Lastly, we got, based on that project only, we got this project of Ambaji, which was 965 crore. So visibility point of view, PSP has not to worry. It is more about increasing our bandwidth to a larger extent and improve our capabilities for the next 1 year.
All right, that's the visibility. Thank you so much for that. So FY27 looks really interesting for the company. But other than that, we believe that you also plan to become debt-free by FY27. That's one of the other targets. At current situation, are we on time or are we sticking to this guidance? And moreover, what sort of a cash flow generation FY27 onwards are you targeting? Help us with more understanding on that.
See, presently we are using a CC limit of 300 to 350 crore. And if you see our receivables also, there are few receivables which are long lasting since beyond 180 days, out of which we are now in the process that by April we should be in position to recover minimum 200 crore out of that 300 long lasting 180 days receivables. If we get that also, and as Adani Group as a partner, they are giving us 10% mobilization advance, which to a larger extent, if we receive by March end or April 1st, April or May, I think I expect 1st June we should be at that freedom.
Okay, so that sounds good. Lastly, Mr. Patel, before we let you go, can you talk to us about what kind of exposure the company has to the Dharavi redevelopment project? We were hearing that you were looking at getting a 2,000 crore rupee tender for the Matunga block. Any update on any of that, and what's the overall exposure?
Yeah, we have already started MIME and we have already got that order of Matunga. We are under the process of mobilization. And in MIME also, we have just completed the excavation part and now we are in the process of starting the final RCC work. So the MIME and Matunga both are now on track. Matunga will be in position to go for excavation after this tree plantation and all other issues from the governance point of view are solved. But at least Mahim is on track and Matunga already we have received.
Right, with this, Mr. Patel, I would like to thank you for taking the time out and speaking with us. So good chatting with you and looking forward to more.
Thank you.